Welcome to Season 5 of the Innovation Junkies podcast.
In this season, you'll learn from successful innovators who have influential stories, practices, and strategies that will have your gears turning. Prepare to be inspired, challenged, and empowered. This is the Innovation Junkies podcast.
Hey guys, welcome to another episode of the Innovation Junkies podcast. I'm Jeff Standridge.
Hey, it's Jeff Amrine here. What are we going to talk about today, Jeff?
Well, what I thought we would do, Jeff, is, we're coming up on the last 3-4 maybe weeks of the year, right here at the end of 2024. And I thought we'd spend this episode talking about what are some things we need to be thinking about, or what our listeners need to be thinking about as they're trying to finish strong and close out the year. What do you think about that?
That sounds like a plan.
Good. So I start with probably the most common comment I ever got from a coach. And he used to use the track analogy, and he would always say, run through the tape, Standridge, run through the tape, right? So I think maybe we start there. We're coming up on the last few weeks of the year. And to be very honest, we say it's even if you start December 1, you really only have about 3 weeks left in the year, because you take a big week out for the most part between, say, Christmas holiday and New Year for those who celebrate those. And so, let's talk a little bit about what running through the tape looks like from your perspective.
Yeah, well, so a couple of things that I think about, and a lot of it is sector dependent. It really depends on what kind of business you're in and who you serve. The challenging thing about this time of year is it's often been said that if you're trying to close sales, there's no sign of intelligent life in your customer base from Thanksgiving through probably the 5th of January. Mm-hmm. So what that means is it can be exceedingly difficult to get things closed with customers during that time frame. People are out. People are trying to relax a little. People have maybe been hustling if they're in supply chain related businesses or retail related businesses, because this is peak going into the holiday season. So, an extra emphasis on making sure that your salespeople are properly motivated and that they're also being realistic in their forecasting so that you can take into account that sort of seasonality.
Yeah. Revenue always comes in lower and slower than what you anticipate. And in the last 3 weeks or last 4 weeks of the year, it's even slower than that.
Yeah, that's really true. That's really true.
And there was really no time to start thinking about that than 60 days ago. No better time than about 60 days ago, right? To be thinking about that end of the year kind of thing. So what else would you point toward?
Well, so other things, and this is potentially kind of a one-off, but I know it's been top of mind for a lot of small businesses. The making sure that you're diligent in getting all of your financial crimes certification paperwork submitted. Now, this is something that our audience may or may not be familiar with, but it was essentially a ruling that came some time ago, beginning of this year, that said, I think it's the end date is coming soon. You have to file to talk about the beneficial ownership in LLCs of every description, and there are some exemptions, and you need to get it done, or else there's this onerous sort of daily penalty that they will assess you. Now, the thing is, it's good to get legal counsel, good to get CPA counsel and guidance on it, because there was a fair amount of gray area or murkiness around who actually had to do it versus who didn't. And so my advice is err on the side of going ahead and filing, even if you think you're exempt. It's not difficult to do. It takes probably 15, 20 minutes to do. Anybody can figure out how to do it. Yeah. But assume that you have to do it rather than assuming that you're exempt. That would be my advice.
Yeah, completely agree. And I would say where I thought you were going, where you said be sure you get all your financial crimes. I thought you were going to say committed before the end of the year.
Avoid financial crimes altogether. Yeah. I mean, if you're not money laundering, you've got nothing to worry about.
Right. But yeah, it's you might if you're looking for it, you might have heard it referred to as the Corporate Transparency Act, the CTA, right, and the BOI, the beneficial ownership something. But anyway, it literally takes 15 minutes maximum, maybe even more, like 5 to 10 minutes.
Yep.
And what you need to have available, or anyone that has a 25% ownership or above, if I remember correctly, in an LLC, you need to have their full name, a copy of their driver's license or passport, a photo of it that you can upload, as well as their home address and their birth date. So those are all the things that you need for all the beneficial owners of 25% or more. And you literally go in, fill it out. It'll seem like some redundant information that you'll be putting in multiple times for the person who's actually filling it out. And then you just click on, add new beneficial owner, add new beneficial owner, add new beneficial owner for as many of them as you have at 25% or above, theoretically no more than 4, right? And you're done. You submit, you're done. You get a designation that it's completed, and you save that, you save that confirmation as well. So
yeah. I mean, it's essential, and it's one of those sort of obligatory things where you don't have a lot of choice, and the penalties are high.
Yeah, minimum penalties like 10 grand or something like that, but then it aggregates daily.
Exactly, exactly right. The other thing, and completely unrelated, maybe a little bit on a happier side of the equation. If you have had a good year and you have a bonus plan in place, this is a little bit of advice, and I would say also a cautionary tale. It's good. It's good to have all of that figured out, to understand how you're going to bonus, who you're going to bonus. All that should have been structured long before now. The key thing I would say, though, depending upon the method of accounting you use and how you reconcile, even though it's great for everybody to get their bonuses prior to the holiday season, sometimes it's better to hold off on those annual bonuses until all the financial accounting is done. You've reconciled where you're actually going to end up. I've seen all too many times companies that go ahead and pay out on a bonus based on what they think the projection is going to be for the end of the year. And then there's a miss. And the last thing you want to have to do is claw back money that you paid out to key employees. So it's better if you can set the expectation to say, listen, we're going to do this in January or right around the 1st of February, if possible, particularly if you're a medium-sized to a little bit larger firm rather than a really small firm, because you just want to make sure you've got 100% accurate numbers and you don't have to have a miss or something or have it lower than expected and then not have the ability to claw it back.
One company that I'm working with, and I've seen others do this as well, is, they don't want to take the tax hit because of carrying that cash forward. Right. So they can certainly do some accounting wizardry with that in terms of accruals and what have you.
Sure.
Or what I've seen them do is go ahead and pay out about 75% of what you think you're going to go pay out,
right,
and then true it up come January 15th, January 31st, somewhere like that.
Great idea.
Spread your tax liability out like that as well. So, and I actually know some bonus programs that say, of your eligible annual bonus, we're going to pay out 20% of it in Q1, 20% in Q2, 20% in Q3, and then 40% at the close of Q4, after the close of Q4, which then, prevents overpayment, allows for what have you. So good guidance there. It's also important, talking about tax liability and what have you, is, if it's looking like you're going to have a good year. In other words, if you've racked up a good net income on the first 11 months of the year, now we're in the last month of the year, you have no reason to believe it's going to be drastically different than what you've already experienced. Then looking for opportunities to prepay some items that you can legally prepay into the next year, before the next year, be able to, pay out a portion of those bonuses that wouldn't be overpayment, and look for opportunities to take advantage of those as well. Any others that come to mind as you're thinking about really finishing strong?
It just highlights having a good controller, good CFO, good CPA firm supporting you so that you can make those wise decisions coming into the end of the year. It's good to have that kind of a bench strength in that area, because it can really make a difference in bottom line of the company and how the money gets used.
Yep, for sure. What about outside the financial arenas and the sales arenas? Anything others that come to mind for you?
I think end of year is also just a good time to take stock. If you do happen to have slack time at the end of the year where the pace of activity slows down, as leaders, I think it's important to be reflective on what worked well, what didn't work well. Are there any team issues that you have to think about? Do you have the right people in the right seats? I think it's a good time to be reflective of what went well and what didn't go well, and where do you need to make some changes.
Yeah,
It's
sure.
a lot of times the first 3 quarters of the year, it's pretty manic. Everybody's pretty strapped and busy. When you do have a little bit of the slack time, don't waste that time. Be thinking about in a reflective way of what worked and what didn't in the previous year.
Yeah, we always talk about our team is that throughout the course of the year, and we just had a new person join, and so I was having this conversation with him, is that throughout the course of the year, we expect a good, healthy jog throughout the average of the year. Maybe it's not a 7-minute mile, maybe it's a 10-minute mile, right? Just a good, healthy pace throughout the year. Now, sometimes you're going to have to sprint. And so we have several periods throughout the year that we have to sprint for a week or 2 weeks, or sometimes even 3 weeks at a time. And so either in anticipation of a sprint or immediately following a prolonged sprint, we have to walk too. But that averages out to that good, healthy clip throughout the year. And so the period between, about mid-December till the first week of January, admittedly is a bit of a time that our team starts to walk a little bit, right? Because we've been sprinting the entire year, and we know that we're going to hit the ground running in January. And so we take a little bit of time to let our tongues hang out and get our breath back, if you will.
Sure.
So very good. So we're talking about finishing strong, running through the tape, some things that you need to be thinking about as you go into the closing of 2024 for your business and or the businesses that you serve. With that, Jeff, I say we call this one wrap.
That sounds good.
All right.
See you next year.
There you go. See you next year. This has been another episode of the Innovation Junkies podcast. Thank you for joining.
Thanks for tuning in to another episode of the Innovation Junkies podcast. We hope you gained some valuable insights and inspiration from today's conversation. Be sure to subscribe for more episodes featuring leaders in the forefront of innovation, and don't forget to connect with us on social media to continue the conversation. See you next time.